Hello everybody, Ignatius L. Jackson, CPA here. I wanted to take some time since tax season just ended yesterday, April 15th. I just wanted to have a conversation with you guys about some common FAQs that I've gotten over this tax season. Probably one of the most common questions that I've gotten is how to save money on taxes. I've talked to you about this on several occasions, but really the W-2 employee, it is very difficult to save a lot of money on taxes. The most advantageous way to save on taxes is going to be having a small business. You don't necessarily have to quit your job. If you like your job or if you're comfortable with your job, it's some guaranteed income. Nothing wrong with continuing to do that. But one of the best ways to save on taxes is to start a small business of some sort. It can be something that you're doing on the side. It could be something that where you just don't want to do corporate anymore. You want to kind of go all out on your own. But one of the keys to saving money on taxes is having a small business of some sort. Now in this situation, you can do it one of two ways. You can do an active business. An active business is going to be something like you're selling jewelry, or you're out there selling some kind of product or good, or you're selling some kind of service like handyman services, CPA services, any type of service of that sort is going to really help you to save money on taxes by being a small business. The other way that you can do it is by being in real estate and being a real estate investor and renting the property out. So when you rent out property, one of the greatest benefits of renting that property out is you get to take a deduction for all your mortgage interest and any expenses related to that property. On top of that, you get an opportunity to take depreciation. Depreciation can save you a lot of money on taxes. So a lot of real estate owners don't really pay any taxes on that real estate activity, but they are cash flowing based on how the tax laws are set up. So that's one way that is commonly used for W-2 employees to save money on taxes, is by having some real estate. But if you really want to go to the next level, having a true small business where you're making some earned income is going to be a really great way to save yourself on taxes. And one of the best ways to do that, once you do have that earned income and you're making $30,000, $40,000 a year, you want to be an S corporation, like the shirt says. S corps are cool, okay? So when you're an S corporation, you will save a ton on taxes, because one of the greatest costs of being in business for yourself is what we call payroll taxes. Okay, payroll taxes are 15.3% of your net profit in your business each year that you're paying out. Now it does cap out once you get to a certain level of earned income that you've earned, but ultimately you're paying 15.3% off the top. No matter what deductions you have on your personal return, no matter what else you got going on, you're gonna pay that 15.3% unless you get set up the proper way. The proper way in most cases, especially if you're making $40,000 a year, is going to be having an S corp. So that's one of the things that I'll just tell you is it's going to save you a lot on payroll taxes, but you don't want to do this on your own. There's a lot. The S corps are definitely a way that you can get yourself into trouble if you're not doing things the right way. You do need to pay yourself reasonable compensation. You got to make sure that you're setting things up the right way and covering yourself so that if you do get unluckily picked for an audit, or they call it an examination now, then you're ready to go, you have your support, and there will be no issues. So just make sure that you're using some kind of professional advice. And of course, I'm happy to help you out if you don't have anybody that you know. But definitely one of the best ways to save yourself on taxes is getting set up as a business. Now that doesn't mean you should be an S corp right out of the gate. You know, if you think it's going to take you a couple of years to start to get to that level, then being a single member LLC or something to that extent may make sense. Because again, really doesn't, the administrative cost and burden of doing it doesn't make a whole lot of sense unless you're at least profiting $30,000. Now, profit does not mean that's what you are selling your product for. You can sell your product for $100,000 and only make a profit of $30,000 because you have all these expenses that you take as deductions. So if you're profiting in the business $30,000, being an S corporation is going to be a great way to save yourself on taxes. So this is just one of the key strategies that's out there, and just want to take an opportunity to kind of talk to you guys about what you can do to save on taxes. So Hope everybody has a good day and you got your tax returns done on time. If you didn't, hopefully you got an extension in.